Hi there traders and welcome to the daily recap show for yesterday's US session, which was Monday the 26th of September. So we're going to start. These were the levels that we spoke about on the report yesterday, and here was the commentary. We said we had initial resistance at 36.94 to 37.04. If we held below here and see further sustained breaks below 36.40 to 36.48, we'll be at price levels not seen for 2 years. So let's go and have a look at the S&P for yesterday. Okay, so as you can see, we had the open around here. We moved up into the 36.94 to 37.04 zone, and we did get a reversal here. We got a continuation pattern here as well. So if you had gotten this and then saw that continuation, there's the warning sign to maybe try and cut out for a small loss. However, if you had taken that and not risk managed this trade, this would have ended up being a loss, even if you'd put for the wider stop above the overnight highs in that zone. So we had this, we then got the push up, we didn't see the full acceptance above there, and then when we come back down, we pulled back and we went straight through as well. So this was clear false break of this zone, nothing really to do around there. And notice how then we've just created this range in the market as well. We came down, we said that the 36.40 to 36.48 was the key zone of support, and breaks below there would be a C price that we hadn't seen for more than 2 years. So we got a nice reversal pattern here off that zone, just taking out the liquidity of that level there. You can see just popped below and then moved higher. So that was quite a nice win. Nice winning trade up into that, but the rest of the session was just fairly range bound. So we were range bound basically, false break of the 36.94 to 37.04 zone, but other than that we were just range bound between that initial resistance and the key support that we had in the markets. So nothing really to do here. We did get a really nice continuation pattern here after this false break. I just think it is with the overall trend, so it does have its merits. I guess my only issue with this is that we are in the middle of a very tight range, so it doesn't open itself up to sort of continuation and momentum trades. So it's just being aware of the context of the market as well. So one reversal here, which would have been valid, which was a losing trade, and one down here from the support, which would have been a nice winning trade. So that's the S&P. Now let's go and have a look at the Dow. Okay, so similar story on the Dow. These were the zones that we were looking at. We said that sustained breaks below 29,200 to 29,250 open up further downside, with initial resistance at 29,625 to 29,675. So let's go and have a look at the Dow yesterday. Okay, so as you can see, we opened up fairly choppy and pushed up into that initial resistance at 29,625, 29,675. Really nice reversal, and we moved all the way down to the sustained breaks below 29,200, 29,250. Now, I wouldn't have actually we didn't see the sustained break. Notice we got the liquidity grab. This is actually quite a nice reversal pattern here because we've got the liquidity grab and then the push higher. This isn't a trade I would take. I've spoken a lot about before recently around this overall trend in the market. Overall trend in the market is bearish. Difference between this reversal and the reversal in the S&P. The S&P was at a much more key level. This was a minor zone. So when you're trading counter trend, you really want to be making sure you're only trading from those key areas. That's why I believe the S&P one was more valid. This one, not so much. This is not a trade I would have taken. I would have been looking for the acceptance below this zone and then continuations from that zone for further downside with the overall trend and context in the market. So that's the difference between why I believe the S&P one was valid and this one isn't, because of the strength of the zone that it's from. That's why the context and these zones can be really helpful as well. This one did, like I say, this one did work quite nicely as well, but that's why I think the S&P was a better trade. Conversely, we did actually get a really nice reversal signal from the key zone, the key resistance zone on the Dow Jones. And that definitely is the trade of the day on this market. So, hope you find these reports useful. Please let me know what you think in the comments on our social media and our YouTube channels. Come subscribe to our YouTube channel, and also join the Keyzone service. It's completely free. It's you get to become part of the Keyzone traders community, and you get these reports before the market opens. So, can really add value to your trading. So, I hope you're finding these reports useful. Please let me know what you think. Any feedback is much appreciated. I hope you're having a great week, and I'll speak to you soon. Cheers.